Satyam Bada Dharmachara Satyamev Jayate. Good morning, friends. Supravat. I am Vipul Kumar. Welcome all of you to today's news desk on income tax, GST, and corporate laws. Let's cover news on income tax. Kerala High Court. Assessing officer couldn't change method of accounting consistently followed by assessee to determine income on estimate basis. Where assessee engaged in construction of the flat was consistently following completed contract method of accounting and said method has been accepted by revenue authorities in past. There was no justification on part of the assessing officer to change the same and to determine income of assessee on estimate basis in assessment year in question. In another case, Rajasthan High Court, amendment to section 115 BBE restricting set of losses against deemed income could not be applied retrospectively. In this case, amendment made by the Finance Bill 2016 to provisions of section 115 BBE, providing that no set of any loss shall be allowed to the assessee against deemed income under section 68, 69, 69A to 69 subsection 2 could not be applied retrospectively. In another case, Madras High Court directed department to consider TDS claim based on manual form 16A as deductor didn't generate form 26A. Where bank deductor instead of generating form 26A issued manual form 16A to assessee evidencing TDS to ask tax paid for interest amount. Assessee was to be directed to approach department by making application enclosing form 16A and department would consider claim of assessee. Allahabad High Court reassessment initiated on the basis of the audit objection justified as assessing officer failed to tax interest income. Where assessing officer worked out profit on basis of contract or subcontract income but failed to add interest income shown in the books as other income. Subsequently, on basis of audit objection, assessing officer was justified in invoke section 147 of the 148 and reassessing interest income. Supreme Court in one case executing separate deed of covenant for non-completed notes in transaction. In this case, Apex Court, Supreme Court held amount received by the assessee as non-competition fee on executing deed of covenant was not taxable under section 28 clause 2. It was exempt as capital receipt. If High Court wishes to hear appeal on any other substantial question of law not formulated by it may, for reasons to be recorded, formulate and hear such question if it is satisfied that case involves such question. In another case, Supreme Court, a special leave petition dismissed against ruling allowing refund to Vodafone as it can't be retained merely on likelihood of demand. A special leave petition dismissed against High Court ruling that admitted refund amount could not have been retained by revenue authorities on ground that as department may have future demand against assessee arising out of pending assessment orders. A special leave petition dismissed against High Court ruling that section 241A granting power to the assessing officer to withhold refund applies for assessment year after 1st April 2017 and not for earlier assessment years. Let's cover news from international taxation. Supreme Court held in one case project office want be constituted as permanent establishment if company wasn't carrying on its core business through it. Whereas a Korean company awarded a project by ONGC for purpose of survey, design, etc. In view of fact that SSC was not carrying on its core business through its project office in India, said project office could not constitute the permanent establishment within the meaning of Article 5(1) of the DTA between India and Korea. Mumbai Tribunal in a case interest income of Mauritius-based FII on foreign currency loans and debt is not taxable in India. In this case, interest income earned by a Mauritius-based foreign institutional investor on foreign currency loans and debt security was exempt under Article 11, Clause 3C of Indo-Mauritius DTA. Mumbai Tribunal held in a case fixed permanent establishment established if Indian subsidy securing business for Singaporean company by entry into agreements. In this case, where SSC, a Singapore-based company, was engaged in business of promotion, development, marketing, and maintenance of computerized reservation system, had its wholly owned subsidiary in India, which was exclusively performing marketing and distribution of CRAs, and was also securing business for SSC by entering into subscription agreement with various travel agents, which could be regarded as SSC fixed permanent establishment in India. In this case, decision also held in transfer pricing, interest income of Mauritius-based FII and foreign currency loan debt is not taxable in India. Following order passed by coordinate bench of tribunal in SSC own case in earlier assessment year, addition to the arm's length price in respect of the notional interest on interest-free loan given to Indian subsidy was to be confirmed at a rate of LIBOR plus 2%. Next case, Delhi Tribunal. Salary payment to the seconded employees working in India not taxable at it was mere reimbursement on cost to cost basis. Where SSC, a Singapore-based company, seconded is employed to an Indian concern for carrying out business operation of its restaurant outlet in India efficiently in view of fact that said employee work under direct supervision and control of the Indian concern, and moreover his salary cost was reimbursed to SSC on cost to cost basis. Amount so paid was not liable to tax in India as fee for technical services. Notification issued by the Ministry of Finance, notification number 52/2020, dated 21st July 2020. In this notification, Cabinet Secretarial, Intelligence Bureau, NCB and NIA notified as authority under Section 138. Section 138, subsection 1 of the Income Tax Act facilitate exchange of information about tax evaders by the Income Tax Department with other tax authorities or enforcement authorities. The CBDT has notified Cabinet Secretariat, Intelligence Bureau, Narcotics Control Bureau, and National Investigation Agency for the purpose of sharing of information. Another circular number 15/2020, dated 22nd July 2020, CBDT specified procedure for notification of the sovereign wealth fund for the purpose of exemption under section 1023 FE. To notify sovereign wealth fund for the purpose of section 1023 FE, the CBDT has specified that the SWF shall file application in the Form 1. Further, the sovereign wealth fund shall also be required to file return of income along with the audit report. It shall also be required to file a quarterly statement between 1 month from the end of the quarter electronically in Form 2 respect of investment made. Let's cover news on GST. Ministry of Finance issued press release on 22nd July 2020. Racket of the clandestine clearance of cigarette busted by DGGI, causing tax evasion more than 72 crores. The Directorate General of the Goods and Service Tax Intelligence Headquarters, DGGI headquarters, has unveiled a racket of clandestine clearance of cigarettes through a factory run in Kota. As per the preliminary investigation, the evasion of tax is more than 72 crores till now. The data from the seized document revealed that the cigarettes were supplied even during the lockdown period due to COVID-19 pandemic. Further investigations are ongoing. Advance Authority ruling Gujarat, transportation of goods service from Magdala port to its general lighterage area or vice versa not exempt. And this ruling, service of transportation of goods in barrages from Magdala port Surat to its general lighterage area of Magdala port from where mother vessels are anchored or vice versa is neither covered in definition of national waterways nor covered in definition of other waterways on any land water, and consequently same does not qualify for exemption contained at serial number 18 of notification number 12 on 2017 dated 28 June 2020. Another advance authority ruling Rajasthan. Psyllium husk powder is classified under tariff item 12119032 tax rate of the 5% GST. Psyllium husk powder, a preparation made from psyllium plant or its part, is classifiable under above mentioned tariff item. Punjab and Haryana High Court Department considered Genpact as an intermediary, denied refund on export of services. Punjab and Haryana High Court accepted Genpact REIT. The department earlier denied refund to Genpact on exports by treating it as intermediary. It has been argued that First Appellate Authority has illegally relied on circular number 107, which later was withdrawn. Further, section 168 has also been challenged on the ground that no mandate can be provided for directing lower quasi-judicial authority to treat circular instruction issued by board to be binding. National Anti-Profiteering Authority, seller guilty of profiteering for increasing basic price of the cinema ticket despite rate reduction. National Anti-Profiteering Authority, in this case, here respondent had violated provision of section 171 subsection 1, where it did not pass on benefit of reduction in rate of the GST to customer by increasing base price of cinema ticket to maintain same final selling price. ECJ ruling, profession of law is an economic activity and person practicing it are all taxable person. ECJ, while interpreting Article 9(1) of the Council Directive 2006 upon 112/EC dated 28 November 2006 in context of service of lawyers, held that profession of lawyer is a liberal profession. The person practicing this profession carries out an economic activity and must be regarded as a taxable person. AAR West Bengal, fusible interlining cloth is classifiable under heading 5903 at 12% GST. Where appellant is engaged in manufacturing fusible interlining cloth in view of fact that it is not a case where cloth is partially coated with plastics and that dotted design result from treatment leading to such coating. Exclusive clause 4 of chapter note 2A of chapter 59 is not applicable and thus subject product made is classification under heading 5903. In another case, Delhi High Court direct department to process manual refund application spread over 2 financial years within 3 working days. Earlier, Delhi High Court in assessee case stayed a condition imposed by the Pew circular restricting a spread of refund claim across different financial years. The condition later was withdrawn, but consequent changes were not made on GST and portal. The assessee filed manual refund application, but department did not entertain the same. The High Court directed the department to process the application within 3 working days. Advance Authority ruling Tamil Nadu, tanks and parts are classified under CTH 87100000. Tanks are classifiable under CTS, our mentioned CTS number, while tank parts which satisfy essential conditions, they must be identifiable as being suitable for use solely or principally with tanks and must not be excluded by provision of notes to section 17 and must not be more specifically included elsewhere in nomenclature are only to be classifiable as part under CTS 87100000. Let's cover news from insurance laws. IRDAI issued circular. In this circular, insurers are allowed to offer Corona coverage as group insurance policy. The IRDAI has now allowed general and stand-alone health insurers to offer Corona coverage policy as a group insurance product. Once the insurer launches this group cover, companies and other organizations may soon be able to buy this cover for their employees. IRDAI issued another circular guidelines for consolidated guidelines on product filing in health insurance business. The IRDAI has issued consolidated guidelines on product filing in health insurance business. These consolidated guidelines are applicable to all insurers and TPA wherever applicable unless otherwise specified. Let's cover news on competition law. Hindustan Composite Limited held guilty of unfair trade practice for cartelizing in composite brake blocks market, where OP had indulged cartelization in composite brake blocks market in India by means of directly or indirectly determining prices, allocating markets, coordinating bid response, and manipulating bidding process, which had an appreciable adverse effect on competition within India. They were guilty of contravention of the provision of Section 3. Let's cover news on company law. Supreme Court in a case held that time limit for passing arbitral award and for completion of a statement of claim and defense extended till further order. Time limit for passing arbitral award and for completion of the statement of claim and defense extended till further order. Time prescribed for completing process of compulsory pre-litigation mediation and settlement extended from time when lockdown was lifted plus 45 days thereafter. Summons and pleadings might be affected by email, fax, commonly used instant messaging services such as WhatsApp, Telegram, Signal, etc. In FEMA, banking and insurance, RBI might in its discretion extend period of validity of checks. Another case in company law, NCLT New Delhi. Petition seeking refund of deposit with company rejected as matter was pending disposal in criminal proceeding. Petition filed under Section 74(3) seeking refund of amount deposited with a respondent company for purchase of flat could not be entertained where such Said issue was already pending disposal in criminal proceeding as well as proceeding under Consumer Protection Act. Let's cover news on SEBI. SEBI later dated 20 July 2020, company may permit stockbrokers to fund securities proposed by listed entities to its employee. SEBI clarifies the SEBI has come up with the informal guidance wherein it has clarified through informal guidance that the company may permit a stockbroker to fund the payment of its side price, which shall be adjusted against sale proceed of some or all the shares subject to provision of applicable law or regulation. Let's cover news on the Insolvency Bankruptcy Code, NCLT Hyderabad. Unsecured loan without any interest and no fixed time to repay didn't fall under category of financial debt. Where financial creditor claimed to have advanced loan to corporate debtor and corporate debtor had defaulted in repayment of the loan amount since the loan was provided as unsecured loan and there was no interest and no time fixed to repay same. Said loan would not fall under the category of the financial debt. NCLT New Delhi resolution plan approved by the COC with 99.84% voting being in compliance with the provision of code was to be approved. Where resolution plan submitted by resolution applicant was approved by COC with 99.84% voting and state did not contravene any provision of law for time being enforced and was in compliance with the provision of code and the CIRP regulation and also met all requirements which may be specified by Insolvency and Bankruptcy Board. Said plan was to be approved. Another case, NCLT Chennai. NCLT do desist from entertaining CIRP under section 10A for 6 months for default occurring between 25th March 2020 to 5th May 2020. Section 10A relates back to date of 25th March 2022 in a reckoning date of default, even though ordinance got promulgated only on 5th March 2020 and published in the Gazette of India, and thus in case default had occurred on or after 25th March 2020, travelers should desist from entertaining such an application even though filed between dates of 25th March 2020 and 5th June 2020, that to both dates being within 6 month period initially specified under section 10A and in view of interdiction imposed by the code itself in relation to filing an application under section 7, 9 and 10 of the code. NCLT New Delhi, corporate debtor can't oppose CIRP citing that proceeds from property mortgage would be educated to liquidate debt. An application filed under section 7 cannot be opposed by corporate debtor by taking a plea that financial creditor has already taken possession of an immovable property, mortgage sale proceeds of which would be sufficient to liquidate debt. Thank you so much for watching this news channel on income tax, GST and corporate law. Please share this news update among professional colleagues and students so that they updated on regular basis. Thank you so much.